The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Monday the 13th, 30 minutes to the European close. What do you need to know out of Europe? Let's figure it out. What we are watching is energy prices continuing to absolutely shoot higher. Gas and electricity prices surging in Europe. Power prices in the UK hitting another record today. Benchmark German prices trading above 100 euros. It's the first time that's ever happened. UK regulators recommending that 12 to 15-year-olds get a single shot of Pfizer's vaccine. Leading epidemiologist Professor Neil Ferguson says that London must act to avoid, quote, a large autumn and winter wave. And the latest polls out of Germany point to the SPD cementing its lead. We're going to be live in Berlin with a breakdown of this weekend's TV debate. Let's talk markets first of all, though, and show you what is happening. As I say, keep an eye on what's happening with nat gas prices around Europe. Today, another 5% higher. They are shooting high. You take a look at the long-term chart. It has gone parabolic. Stocks a little bit positive today. We're not up by much. We've had 5 days down. We're buying the dip a little bit. Actually, I think we've had 4 days down. We're buying the dip a little bit here in Europe. It was a little while before people stepped back in again, cautiously. Maybe some buying today coming back, Alex.
Yep, same thing here in the U.S. 5 down days for the S&P, but now we're higher in part because of energy, up by about 3 percentage points. All the best performers within the S&P are all U.S. E&Ps. Occidental, Schlumberger, Petroleum, well, Schlumberger's oil services, but all the oil names and those value trades doing quite well. On the downside, the worst performing stock within the S&P is Moderna, off by about 5 percentage points after a study of scientists said that maybe we don't need a booster. We'd be better off actually vaccinating more people in the population rather than deal with boosters. Idiosyncratically, though, I wanted to highlight what's happening with the Golden Dragon China Index. Those are Chinese-listed ADRs here in the U.S., off by another 1 percentage point. And that is really the continued crackdown in technology stocks. This time, it's going to be Apple Pay, so Alibaba feeling the effects of that. Now, talking commodities, we're seeing aluminum come off that high of 3,000, the highest level in 13 years, now down by about 1 percentage point. Are we getting a little frothy here? Some analysts are saying, look, we're a little bit excessive when it comes to the aluminum rally, take a little bit of a shine off. But Guy, it all speaks to that higher input costs, potentially then higher inflation as well.
Let's talk about inflation. I guess this all relates back to the stories we've been focusing on. The New York Fed conducts a survey of inflation expectations for consumers. It's a really useful thing to pay attention to. The data's just being released right now. Let's focus first of all on the 3-year number, because 3-year ahead inflation expectations, 4%. It's never happened before. We've never been this high in terms of the series that we're talking about here. In terms of the 1-year inflation expectations, we're up to 5.2%. Let's break down the data in a little bit more detail now. Mike McKee is working his way through it, our international economics and policy correspondent.
Well, Guy, the issue, of course, is that Jay Powell and members of the Fed have been on about consumer inflation expectations. They're worried that if people see prices continue to rise, they're going to ask for continual raises, start a wage price spiral. That's been the Wall Street fear. Nobody believes it's happened yet, but these numbers are starting to be a thumb on the scale for reasons to worry. As you point out, both the 3-year and the 1-year rate have gone up to record levels. It's the 10th month in a row that we've seen an increase in the 1-year rate. Now, normally, you don't pay attention to the rate itself, because consumers generally overestimate what the rate of inflation is. But look at the movement. It's going in the wrong direction. People think that we're going to see a significant rise over the next year in gasoline prices, 9.2%. We're going to see the medical care prices, 9.7%. Things are going up all over. Not just in the United States. We're also looking for inflation numbers from Europe this week, and we're going to see, according to the expectations, a rise in the expectations number in inflation. According to what consumers are saying, the white line is the UK, the ZEW inflation expectations index. Now, the Eurozone rolled over a little bit, and we'll see if that continues now that the European Central Bank has talked about the non-taper taper. Maybe that gives people a little bit more confidence. But as you can see, both are very elevated, leaving us with the questions of what does the Fed do about all this? And will Ebenezer Johnson give Alex Cratchit some coal or natural gas this winter?
I think I'm going to be okay. I think Guy's going to be in a bad spot. Guy's going to be in like 17 ugly Christmas sweaters sitting in his house.
I just put on another jumper. I remember my parents saying it. I feel that I have the opportunity now to say that as well. I think my kids should really experience that kind of waking up in the morning with the frost on the inside of the window.
They're going to be
Fun
fine.
growing up.
It's your wife that I'm a little worried about. She can come stay here. Mike, thanks a lot. Bloomberg's Michael McKee. All right, let's wrap this all into the market reaction here. Steen Jacobsen, Saxo Bank CIO and chief economist, joins us now. So we get, series high inflation expectations from the Fed here coming in at 4%. You're potentially going to have an incredibly cold winter here, skyrocketing gas prices, power prices, electricity prices. What's going to be the feed through? I know you're an economist. You're going to say that's not core, but it matters.
And it is core, and I think the whole narrative that we can have a increase from the supply side of the thing. There is no elasticity in the supply side. We see that in electricity, where Germany has underinvested into replacement of the atomic power stations that they closed down. They have only done 3 additional permits over the last 5 years. Now they're paying the price through this increase. The Nord Stream is coming slow. But what will happen, Alex, overall is that there is a huge consumer tax right now being implemented, and it's going to get higher during the winter, which means that this scenario that we look at right now is probably a stagflation light. Not stagflation in the sense that we had in the 1970s, because as an economist and even as an economy, it's very difficult to achieve. But what we will see is this constant inflationary pressure, and the base effect will not take care of it, because of course the base effect is now kicking in the CPI through what is the rent equivalent that will continue to rise. And more importantly, I think if you look under the hood of the CPI, in particular in the US, you will find that what is normally a distraction from the overall inflation level, which is the service industry, is now rising at 12, 15, 20%. As someone was just commenting recently, it's amazing. You go to a full restaurant, but you get no service. Simply, there isn't enough hands to go around to pay for this. So anyone who thinks that this is temporary is out for a big shot during the winter.
What does that mean for markets?
It means that the market needs to look at rate sensitivity in terms of what goes on. And don't forget, if you have a technology stock with no earnings into the future, which is priced at very high multiples, it is the equivalent of owning a zero coupon 100-year bonds, which will go down from, which could come down 20-30% on a very small move. So what we in the market call convexity is the fact a very small interest rate increase, say 25-50 basis point, will have an outside impact on the overall market, in particular in stocks that doesn't have the earnings to support and live through that higher prices environment that we're seeing right now.
So where's a safety bet? How do you find that?
Yeah, so what's interesting is, so what's overall driving this, of course, is that we've had a massive amount of fiscal stimulus coming to what we call the lower K, the low income, the transfer income. This is now being replaced by the green transformation, overall the ESG commitment from governments. And I will argue that that is the single biggest political project ever. It will need to succeed, not by virtue of being productive or even by returning money on the actual investment, simply because this is what the political establishment, this is what the voters seem to want. And as we do that, Alexis, what we'll get is, of course, that we will crowd out 2 things: government sanctioned asset, green transformation, energy, and on the other side, the free discovery markets, which is the commodity markets. And here you're immediately back to where Guy started this hour. We see higher energy prices with higher commodity prices.
I want to stick with that theme. We're about to have a German election. We're going to talk more in detail about that in a moment. We've got a French election coming next year. If we get a winter of high COVID cases and high energy costs, what is going to be the political implication in places like France?
Good question.
Huge amount of additional stimulus across the board. You have already the EU Commission warming up the engines to allow the golden rule, the maximum 3% structural deficit, to be increased by another 1% into the green investment sector. So in other words, you're going to have two kind of debt levels in Europe going forward, which is the 3% old legacy debt. And then you're going to have additional 1% this year, probably 2% next year, and down the line, probably even 3 and 5%. In other words, we're going to run structural deficit for as long as the eye can see, because similar to what happened with the euro, which was built without a foundation, which was built into a history of no currency unions ever working, we all underestimated the political capital. This is whatever it takes in order to get the green transformation and the inequality movement going. The cost of this will be much more inflation, much more channel capital into the same pockets of money. And that will mean that inflation spiral will continue to feed itself, even under very low growth level, because under low growth, what is the response? Additional fiscal stimulus, primarily into this green ESG headline.
Stine, I once worked with a Danish co-presenter. She used to say to me, there's no such thing as bad weather, just bad clothes. So maybe that's what we all need to be investing in.
No, lies.
Investing in for this winter. Stine, great stuff. Thank you very much indeed. Stine Jacobsen, Saxo Bank's CIO and chief economist. Alex, we've teed up the political narrative. We're going to get more detail on what is happening with the German election. 2 weeks away, the latest polling pointing to the SPD cementing its lead. Judy Dempsey, Carnegie Europe Senior Fellow next. This is Bloomberg.
I'm committed to ensuring that there is more respect in this society again. Those who earn little today must be paid better, that we get a minimum wage of 12 euros and stable pensions.
Olaf Scholz speaking at the TV debates, during the TV debates last night in Germany ahead of the elections, the leader of the SPD, current frontrunner to replace Angela Merkel as Chancellor. 2 weeks to go, roughly, until the elections. Joining us now from Berlin is Bloomberg's Maria Tadeo. Maria, did the TV debate change anything?
Well, look, it didn't, to the extent that there was a poll conducted right after the debate and Olaf Scholz was the winner. But again, that's not a surprise considering he is polling very strongly, especially as a candidate. Just today, we've had a new poll come out that puts the SPD at 26%. So clearly, this is a lead that's being cemented. There is this idea, particularly in Berlin, that at this stage, it really is about Olaf Scholz not making mistakes, and he is an autopilot to win this election. But of course, we know the coalition talks will be very difficult after that. The card, however, that the CDU, the Christian Democrats of Angela Merkel, are still clinging onto is a polls or polls. And this idea of a red-red-green coalition, a very left government, that could scare the perhaps elderly, the more rural population of Germany, voters who perhaps may not participate actively in debates and who may not be on Twitter. They talk about the real Germany that would come out to vote. That is the one card that the CDU is still clinging on to. However, the polls look dramatic for Armin Laschet. This would be a really bad result for the union if it were to crystallize.
Maria, we talked in the first debate about the role of Afghanistan in the refugee crisis that could be emerging. Was foreign policy discussed at all yesterday, or is it now solely a domestic election?
Yes, and that's a very good point, Alex, because this was a debate that touched on many subjects, but there wasn't a single question on foreign policy. We didn't hear about China. We didn't hear about Russia. The fallout from Afghanistan, which was a real debacle for the Merkel government, did not feature in there. And we did not hear anything about European reform. You know, we're talking about fiscal reform in Europe. That did not even feature in the debate. So this is still a Germany, perhaps to some extent, being reluctant to take big positions in the world, and an election that is still very much fought on a very inwards domestic basis.
All right, Maria, thanks a lot. Great reporting. Bloomberg's Maria Tadeo joining us there. Let's get some more insight now with Judy Dempsey, Carnegie Europe Senior Fellow. Judy, at this point, what's your base case for a coalition by the end of September?
Well, there's going to be a coalition of sorts. We don't know what kind. And I would just be a little bit cautious about the opinion polls. They have been wavering over the last couple of weeks. They've been quite consistent, giving Olaf Scholz, the Chancellor candidate for the Social Democrats, a lead. But we have to be careful. There's so many undecided voters. There's not only the Greens to consider now, there's the Liberals coming up, there's the AfD, the far right-wing movement. And I'm a little bit cautious about the polls. We're in a situation that the atmosphere in Germany, especially among the older generation, they don't want change. The younger generation do want change. So this is going to be a very interesting competition.
Could there be a catalyst in the next 2 weeks that finally sets this election on fire? Because at the moment, it does feel as if the core of Europe, the center of Europe, Germany, its most important, you could argue, economic part, there is, as you say, no debate. They're not having the debate they should be about the future of this economy, the future of Europe, the future of Germany's position in the world, particularly as the US steps off in a different direction.
I don't think we want to hear these things, Guy. The attitude towards change is very muted when you mention artificial intelligence, digitization, the role of China, globalization, what's happening to the transatlantic relationship. They are things outside this German outlook at the moment. We're dealing now with a kind of comfort zone, an insular comfort zone that Olaf Scholz, head of the SPD, wants to cultivate. This is the first thing. And secondly, do you remember when Macron ran his first election campaign to become president? It was Europe, reform, radical Europe, where we're going. None of this enters the kind of vocabulary here in Germany. It's actually very disappointing because I think there is a disconnect between the status quo and a real younger generation that actually does want change. They're pro-European, they want this language, they want to get out, they want to shake up this economy. There's been endless studies done on, for instance, homeschooling. And homeschooling was pretty miserable because the digitization and the internet didn't work. We're talking about a very rich economy here. And really, it functions pretty poorly on certain levels.
So, Judy, how does that wind up playing out? So let's say the status quo wins because the older generation is a bit worried. Where does that set up Germany then going forward in a world without Angela Merkel?
Well, nobody's indispensable, but certainly Angela Merkel did make herself indispensable in some ways, and she was very reluctant to choose very charismatic, strong leaders. But a world without Merkel, she chose Armin Laschet for continuity. Well, this continuity isn't going to bring Germany anywhere. This is the first thing. Secondly, when leaders do assume power, do they change? I'm not so sure it's in Armin Laschet's DNA to change. He's very much a status quo person. He's got good connections with Russia, with China. They're very much involved in North Rhine-Westphalia. He doesn't really embrace climate change. He barely mentions the word. He's not even a reluctant reformer. He's reluctant. Whereas Scholz, keep an eye on Scholz. He's very interesting on the economy and he's got very good relations with France. This is very important for the engine, for the future engine of Europe.
Well, let's just talk a little bit about that. Is there a relationship between these two elections? We've got the German election coming up in a couple of weeks' time. We've then got potentially quite a difficult winter, and then we've got the French elections. Can you draw a line between these two and what is about to happen in Germany and the gravitational effect that may have elsewhere?
Yeah, that's a great question. And I suppose you want me to answer it. First of all, the outcome of the election will influence in some ways France, because what France is looking for, and don't forget what's happening in the Netherlands as well, they're looking for a kind of new constellation of European leaders. Someone will come after Merkel. If Macron wins, he will do a very careful realignment with the Dutch. And also, if Scholz wins, it's very important for France. France would feel a little bit uncomfortable if Armin Laschet, head of the Conservative Democratic Union Party, won, because his heart isn't in the kind of European integration or the fiscal reform or even more economic integration, which actually Scholz now supports. So in that sense, France is very much looking at the constellation that will emerge here in Germany over the coming weeks. And this may actually not influence the outcome, but certainly give Macron new momentum if the SPD win.
That's interesting, because to put the two together, this is the future of Europe. Judy, always a pleasure. Great stuff. Thank you very much indeed. Judy Dempsey of Carnegie Europe. We're going to have much more coverage of what lies ahead for Germany. We've got a special coming up this week. Germany decides, the CEO briefing with Bloomberg's Francine Lacqua. It happens Wednesday at 9 a.m. London time. What do we got coming up for you next? Well, it was quite a big weekend. We saw Raducanu winning the US Open. It was a sensational Saturday afternoon, Saturday evening. Medvedev also winning as well. He's going to join us next. We're going to talk about the future of tennis. That's coming up. This is Bloomberg. So, what a weekend of tennis. Fans seeing history being made at the US Open, Flushing Meadow in New York. We saw Raducanu winning on Saturday night here in the UK. An amazing game. What an amazing weekend of tennis. Let's deal with the details of what the business implications of all of this are. Laura Wright standing by.
Thanks, Kyle. Emma Raducanu's fairy tale run played out at Flushing Meadows. She did not drop a set the entire tournament, defeating fellow teenager Canadian Leylah Fernandez in the final. In the men's tournament, there was upset. Medvedev stopped Novak Djokovic from surpassing Roger Federer and Rafael Nadal's record of 20 Grand Slam majors. Now, it was interesting in the UK, Guy, because the only way to watch the US Open was via Amazon Prime. They have exclusive coverage. That was until Emma Raducanu secured her place in the women's final. Then it was reported by The Times that Channel 4 paid a 7-figure sum to Amazon Prime so that they could also broadcast the final. Now, for Amazon, this was a fantastic deal, bringing extra publicity to the Amazon platform, allowing them to reach a wider audience via terrestrial TV. In the UK, Amazon Prime is accessed in less households than their main competitor, Netflix. So subscription services, well, they account for around 7% of Amazon's total revenue. And you can see from my chart here that the revenue of subscription services has been increasing quarter on quarter, culminating in $8 billion in the second quarter of this year. But ultimately, it's about bringing more people onto the Amazon Prime platform, and live sports coverage is one way to do that going forward.
All right, Laura, thanks a lot. Really appreciate it. Great setup. Bloomberg's Laura Wright joining us there. I want to bring now in Bloomberg's Bonnie Quinn, who is standing by with the winner of the U.S. Open men's final, Russia's Daniil Medvedev. Bonnie?
Alex, thank you. Yes, Daniil in Midtown Manhattan today celebrating his big win, straight sets win, in fact, in Arthur Ashe Stadium last night. Daniil, congratulations. How are you feeling this morning when you woke up? What did it feel like to be the dream slayer, Djokovic's dream slayer?
Thanks a lot. I mean, first of all, didn't sleep a lot. Definitely slept like 3 hours. Didn't have a lot of time, but the main feeling is just happy, a lot of relief, a lot of happiness, something I've been dreaming of as a child, something first you dream of, but think you can never achieve. And then you understand that you're actually close to doing it. But talking about tennis as a sport, you never know until you do it that it's going to happen. So I'm really happy to manage to pull this one off, especially against Novak, one of the greatest tennis players of all time.
And one of your neighbours in Monaco. We'll get to that in a moment. The other thing that was difficult about last night's match is that the New York crowd was pretty intense. It was post-pandemic crowd. Everybody was so happy to be watching live sports. And, you know, you're talking about maybe 25,000 people at Arthur Ashe Stadium. They weren't necessarily on your side for some of the match. Was that difficult to deal with?
It was not easy at the end. I'm almost sure that it was not against me. It was for Novak because they wanted to witness history. It's completely understandable. And damn, it was really very tough at the end, especially when I didn't do the first championship point. I lost the game. They get into it even more. They understood that's the chance to bring back Novak. And it makes it even sweeter as a victory because it was, I mean, I have nothing more to add than it was super tough.
You had a nice conversation with Novak yesterday on the podium. Have you had a chat with him this morning or today since?
I haven't seen him since the match, but yeah, we get along pretty well. So
you'll definitely be facing each other again soon. So Daniil, talk to us a little bit about the prize money. You've $2.5 million now in the bank, and obviously you live in Monaco, so taxes aren't an issue these days. Have you started investing your money, and what do you do with it?
Well, first of all, I still have to pay tax in New York State, so that's the first part of the story. But of course, yeah, I try to take care of my money. I won't make it public, but I don't spend all the check in the first night, that's for sure.
Naomi Osaka was talking about looking at crypto. She's not in there yet, but is that the type of thing you'd be looking at? Or, you know, she invests in Sweet Green, for example. Are people coming to you with ideas?
Crypto is not my thing, but yeah, I definitely have people helping me in this topic, and I trust them because, again, everybody knows how to do well their job. I know well how to win tennis matches, and I have other people around me who knows well what to do with the money. And if it's crypto, it's crypto, but so far it hasn't been.
The PTPA is making an effort to up the prize money for players. Is that something that you're behind? Do you think players get enough of the revenue from tennis, from the tour?
That's actually a very tough and interesting question, which I think we could go on for hours. You know, I always said that PTPA is still a young story, and I don't want to rush into it. Neither saying that it's bad for tennis and it has no sense. Neither saying that I'm completely up for it and completely behind it. I think they're trying to do something good and something new. But again, I need to wait some time to decide and to see if it's good for tennis or no. Talking about the revenue, yeah, the question is about the percentage of how much Grand Slams earn and how much we get, because that's a question. They also spend a lot of money, the Grand Slams, and of course there was a pandemic. So it's a question that I think is gonna go for some years on. Hopefully it's going to resolve as in any other sport, because again, tennis is a big sport and I'm sure there are solutions.
And certainly grassroots tennis grew by 20% during the pandemic, so that was good for the base. Daniil, I do want to ask you about the pandemic and vaccinations. Only about 50% of players chose to get vaccinated. Why the reluctance among tennis players to get vaccinated?
Well, to be honest, I'm actually surprised always by the numbers, because for many players I talk to, I think it's a very private matter. And of course, between each other, we talk about this, and I'm almost 100% sure that it's more than 50%. And so when I see these numbers in media, I'm just asking myself, how do they know? So again, tennis is such an individual sport that, and many of us, again, are playing against each other every day. It's one against one. So many of us want to keep our medical history private, not only talking about pandemic and COVID, but about everything, because everything can be beneficial to win the match. So I'm just interested where they get these numbers.
Well, certainly the crowd each had at least one dose, and everybody was very, very thrilled to be able to go and watch. You provided some great entertainment yesterday, and we will see you again in New York. Daniil Medvedev, thank you so much.
Thanks a lot. Thanks a lot for having me.
Great interview, Vonnie. Fantastic stuff. What a weekend of tennis. Absolutely amazing. Vonnie Quinn speaking with the Men's Open champion Daniil Medvedev. Okay, the Russian market, out of interest, trading a little bit higher today. So maybe that's one area that he may want to take a look at. So energy stocks generally actually are doing quite well. So the Russian market is up. The European markets broadly are higher. The London market is outperforming a little bit versus the CAC 40, but pretty much neck and neck with the DAX today. Energy stocks up there, auto stocks up there seems to be the narrative. Let's show you what's happening with the Stock 600, give you an idea of what the session has looked like thus far, because we're definitely off our earlier highs. As you can see, midway through the day, we were certainly feeling a lot more positive. The buy the dip mentality was in. We've certainly nosedived off that towards the back end of the day here in Europe. The inflation narrative is certainly a big feature. Keep an eye on what is happening with energy costs around Europe. You can take a look at what's happening in Germany today, pushing ever higher. The UK as well. UK nat gas prices up to a record today. Electricity prices pushing higher and higher. It's going to be a very interesting winter. Now, there's a push across here. So you've got UK nat gas prices pushing up. Brent is also now becoming part and parcel of this narrative as well. as we watch what is happening. As you see, sort of almost a substitution effect. Where do I get my calories from is the real question here. If gas prices are shooting up, maybe the calorific value of Brent becomes a little bit more valuable. And we're certainly seeing that. But gas prices in the UK today up by nearly 6%. Brent crude rising, we're up by around 0.8%. We are starting to see aluminium just pitching over a little bit. Aluminum down by 1%. Obviously, a huge rally north of 3,000 earlier, just beginning to fade a little bit. But it's been certainly meteoric, the price action we've seen in aluminium over the last few days. In terms of the stock setup, as I say, we've seen energy doing relatively well today. We're seeing the auto sector tracking a little bit higher too. That's why Germany and the UK maybe getting a little bit of outperformance here. So energy's the lead gainer, up by nearly 3%. The car sector's up by 1.77. Banks, utilities, insurance, all tracking higher. Bottom end of the market, you've got retail, you've got technology, you've got healthcare. Down there at the bottom, some of the consumer luxury stocks also just giving back a little bit of ground today. We're also seeing some weakness in the aviation sector. Let's talk about some of the individual stocks. Royal Mail tracking higher today. Apparently it's going to start delivering parcels for Amazon. Huge shortage of truck drivers in the UK at the moment. Distribution is going to be a key story as we head up towards the festivities around Christmas. So Royal Mail tracking higher there. I put Rusal in as well on that aluminium story, up a little bit more earlier. We're tracking up by 1.19% there. And then there's EasyJet. Huge story at the back end of last week. We've got commentary over the weekend from Michael O'Leary over at Ryanair suggesting that EasyJet and Wizz should get together. Otherwise, they are ultimately going to be taken out. EasyJet coming into the market, raising a huge amount of money. There's also speculation, potentially, Alex, that we could be seeing IAG do the same thing. But it's going to be interesting to see as well how the credit market handles this. The credit market, in some ways, has given some of these airlines a fairly straightforward route, particularly in the United States. Does that pressure start to mount up? Maybe as it becomes clear that actually the journey back to normality is going to be a little longer than maybe we all thought.
Yeah, but huge issuance from the airline guys in the credit market, pretty much anywhere you look, whether Europe or U.S. Let's get more insight on that with Luke Hickmore, Aberdeen Standard Investments investment director. Luke, you're also sort of an airline credit guy. That was your specialty in a past life. What do you think? Are we going to have to see more consolidation? And how does the credit outlook look for these guys?
I think we have to see more consolidation. If you look, cash flow, return on investment, really just Ryanair and Wizz were making money pre-COVID. So, and that points to a oversupplied industry. You know, we were seeing 8,000 odd flights a day in Spain, but still seeing the prices come down. And it feels, you know, it's going to take a long time to get back there. We need to see the consolidation to get it more cost effective, more profitable as an industry. And that makes a big difference for us as credit investors. We don't really want to be on the side of the person making the acquisitions. We want to be on the side of the people who get bought out by hopefully a better quality one. So people like EasyJet, where you could look at them as an investment grade company and it looks like a pretty decent kind of business, actually may not be the best place to be at the moment until we know what their eventual outcome's going to be. IAG as well, you know, difficult, trouble with their balance sheet right now. It'll get better. I think actually by 2023 they'll be looking for bolt-ons, and EasyJet could be one of those coming in as well. But we do need to see those numbers coming back and cash flow coming back in the industry. I think some of the other big carriers around Europe have got all sorts of problems. People like Lufthansa and Air France, KLM, we could sell them selling off bits of their fleet quite easily.
Luke, I'm really struggling, and to your point about kind of the legacy carriers out of continental Europe, I'm struggling to see where the acquirers come from. Why would Ryanair, I can't see MLA or Michael O'Leary being interested in anything other than organic growth, i.e. taking advantage of the weakness that is elsewhere. EasyJet will see what Johan does. IAG maybe when the balance sheet gets sorted out. But there does seem to be a lack of acquirers. The strong companies, why aren't they just simply going to sit back and wait for the capacity to come out of the market and then take advantage of it?
Well, interestingly, Ryanair have quietly done a bit of M&A, of course, over the last few years. They bought Lauda Air, and it's not been a particularly successful acquisition. And I guess that's coloured some of his thinking over the weekend. But, you know, if an opportunity comes up, they won't stand by and let it happen, especially if it happens to be a Boeing fleet, which is, of course, what Ryanair is through and through. It's it's grown in the 747, and they've got big orders for another 200 of the 747 MAX. Now, if they can get somebody in that space as well, then it works for them. Without that, I think it's really difficult. IAG, if we're a year and a half, 2 years down the line, and cash flows start to come back for them, they are set up for acquisitions. That is how the company's structure works. So you could see it, but perhaps maybe not immediately.
So, Luke, when we would think, say, a year ago about travel coming back, the benchmark was like travel would come back. Like it'd be like full pre-pandemic travel, everything's open, everything's great. If we deal with this like a flu season and we still have some vaccine resistance, what's like your new normal then when it comes to air travel?
Well, I think if we're talking short haul, we're probably next summer. Maybe next summer leaking into Q3, Q4 before we're back to 2019 levels. But long haul's the problem now, and long haul remains, I think, one where it's really difficult to see, and I'm sorry for this, the flight path back to normality in that space. And it's a big issue for the legacy carriers, right? I mean, the most profitable route in the world, the New York, London Heathrow route, is not earning the kind of money that BA needs it to earn. So that could take until 2023, maybe even into 2024, which is a problem. You know, Lufthansa now majority owned by the German government.
Yeah, I'd love to be able to fly to the United States. It's quite all right, Luke. I'd love to be able to fly to the United States. There's an IATA briefing coming up, an AGM coming up at the beginning of next month. Quite hard to get in at the moment, which, as you say, is something of a surprise, given the fact that we do see vaccination rates pretty similar on both sides of the Atlantic. In fact, Europe looks like it's ahead now. If that is the case, what is the future for this industry in Europe and in the United States? Long haul was a huge profit driver. The front of the plane, business class, a huge profit driver. We are seeing costs going up. We're going to see costs going up even more once environmental standards come in. It feels like we are at the beginning of what could be a very difficult journey for the aviation sector. Do you think creditors are fully recognizing that at the moment? At the moment, it is relatively easy to borrow for an airline. Why do you think the credit market is being so benevolent right now, given the headwinds that are coming?
Well, we've come into this crisis with a lot of carriers holding the planes on the balance sheet rather than leases. So they've been able to tap into that as a source of financing. And possibly there's a little more room for that to go on from here. But the point there, Guy, I think the really big one is how they cope with environmental changes that they are going to have to put in place on their fleets. You need a good balance sheet to bring in the new planes, which reduce the emissions and move you forward in terms of the environmental impact that you're having. Now, if you're a legacy carrier, you've borrowed an awful lot of money like Lufthansa or Air France KLM, that's a really difficult position to be in, to persuade the government to put more money in to buy more planes. So I think people like Ryanair again and Wizz Air and to some degree IAG are actually leading in this in terms of reducing their environmental impact, and it'll make all the difference for us. But look, business class travel for business people, I think, may be something that takes even longer to come back. I actually had a client visit our offices a week and a half ago from Germany. That was the first time we'd had somebody visit in a year and a half. What a pleasure it was. But that was just local, short haul. And I think actually traveling over to Asia or America right now is just off the cards.
It is.
Uh-oh.
Sorry to say.
Let me reassure you of the fact that it is incredibly difficult. You could, if you're an American, Alex can come over here, no problem at all. As long as she's got the paperwork all lined up, it's good to go. Okay.
We
Luke,
would have all
thank
loved
you very
to be
much
at the US
indeed.
Open.
That is definitely true. I'd like to go to the IATA events, the AGM there. It's kind of ironic that given that's a huge travel event, that I can't make it. Anyway, Luke Hickmore of Aberdeen Standard Investments, greatly appreciated. Let's take a look at the final numbers. These are the stories that we're watching here in Europe as they've developed. The FTSE 100 outperforming a little bit, as is the DAX, the CAC 40. Some of the luxury stocks just giving back a little bit of ground they picked up towards the back end of the last week. Energy and autos. That is where the market is here in Europe today. This is Bloomberg.
This is Bloomberg Markets, European Close. I'm Rich Gupta, and you're looking at a live shot of the principal room. Coming up, University of California, Irvine's Mehra
Darren at 4:30 p.m. in New York, 9:30 p.m. in London. This is Bloomberg.
Just some breaking news for you. Democrats are planning, quote, meaningful change to the cap on SALT deduction. This is state and local tax deduction. It's how much you're able to write off in terms of your mortgage on your taxes. And it's huge for people who live in New York, New Jersey, Connecticut, etc. It's been a big issue. Moderate Democrats have been really pushing to raise that cap. It looks like they're proposing a meaningful change. We'll keep you updated on that as it crosses, Guy.
Yeah, we'll get more details on that. Obviously, hugely important to a huge number of people in the New York area.
One sitting right here.
I was about to say, I'm sure you're paying attention to this one with a great deal of interest. Let's talk about what's happening with the virus, because we can't keep sort of our eye off that for too long. The latest numbers, obviously, well, certainly here in the UK, fairly stable, but fairly stable at a reasonably elevated level. Here's the WHO Special Envoy on COVID-19, David Nabarro, talking about variant risk.
Whilst there is virus circulating in the unvaccinated world, there are huge risks of variants emerging that will eventually be able to beat the vaccines that we're using in the UK, in the US, and in Europe. So we're in a very unstable situation. Please let's slow down, look at the world as a whole, and develop a response plan for the whole world and do it properly.
The view from the WHO. Sam Fazeli, senior pharmaceutical analyst at Bloomberg Intelligence, joining me now on set. A rare privilege to have Mr. Fazeli here. Dr. Fazeli. Let's talk a little bit about what has just been said. What is the best use of our vaccines right now?
Yes, I was on that call actually, Guy, and I have to say the best use has to be driven by data. Excuse me. Until we know for sure that we are not getting breakthrough rises in severe infections, and I don't think we've seen the data to suggest that yet, but that doesn't mean that it won't happen, then I don't think it's right to just assume that this vaccine, you don't need the third shot. If we start seeing that, and you've given all your vaccine away, you don't look very clever. On the other hand, we do have lots of people in the developing nations, excuse me, that still need a shot.
You got there.
Yeah, don't worry, Guy. Well,
how far away are you?
We'll find out. Yeah,
you're definitely
not far
6
enough
feet.
for Delta. I can tell you that.
Hey,
so
Sam.
The issue is, yeah.
So if that's part of the problem with the booster, I just read a headline that like Israel is looking at a 4th dose. I mean, why can't we all get our ducks in a row here?
Yeah, I mean, that might just be talk. Let's just wait and see. And, you know, a population of 10 million people, it's easy to say we'll give them a 3rd shot, a 4th shot, or whatever else. So the point is we need to see the data from Israel, which I think is absolutely critical, on what happens with severe infections after just 2 doses and the timing of that. If you're not seeing any waning, then, you know, the argument does stack against giving 3rd shots.
Let's talk about what's happening here in the UK. News today that potentially we're going to give 12 to 15-year-olds 1 shot of the Pfizer jab. You're shaking your head. I thought the Pfizer dose was a relatively low-dose shot anyway. Is this the compromise?
No, but I just love the UK because they can't stop tinkering. First it was, OK, we're not going to do 3 weeks' time. We're going to do 12 weeks, which turned out to be OK. Then AstraZeneca vaccine and some questions there. And now we're running around with no masks on subways and things. A lot of people aren't. I don't know about
you can't go on the subways. The trains you can, the subways you can't.
Oh, tube, you have to wear a mask?
Yeah.
Well, I'd like to see that. I haven't tried it yet. But all I'm saying is that we do like to kind of mess about. And here is a little bit of, you know, scientifically, there's no data. But these are experts. There's 4 of them. And they've been looking at vaccines and vaccinations for years. I learned to eat humble pie when I had a go at them at the idea of expanding or extending that interval. So therefore, I'm going to continue to remind myself that these guys perhaps know better than most of us.
I don't know, Sam. You're pretty awesome. We're going to continue the conversation with Sam Fazeli on radio, DAB Digital Radio, the cable at 12 p.m., 5 p.m. over in London. Sam Fazeli of Bloomberg Intelligence. Just to recap some of these headlines here, Democrats are now planning, quote, meaningful change to the cap on SALT deductions. It would potentially then enable homeowners to deduct more interest on their mortgage on their taxes. It's a huge contentious issue. We'll get more updates for you in just a moment. This is Bloomberg. All right, so more on that headline. Democrats planning meaningful change to the cap on salt deduction. Joining us now, Bloomberg's Balance of Power anchor, David Weston. All right, David, what would that actually entail as far as we know?
Yeah, well, this is potentially big news for you and for me, Alex. I'm not sure for Guy, but for you and for me, because it's really cash in our bank account. As you know, what they did under President Trump is they really limited the amount you could deduct from the income that you're reporting to the federal government to pay taxes on when it comes to state and local taxes. That's the SALT. And now we have two members of the House Ways and Means Committee, not coincidentally, a New York and a New Jersey congressman who are really affected by this, saying there's going to be meaningful reform here. Basically, they said specifically that they're going to undo the short-sighted capping of SALT by Republicans. So, I mean, we don't want to get too far over our skis, but Alex, you and I might have some more cash in our bank account here.
David, how is this going to affect the calculation? I thought the idea was at the moment that we needed to raise taxes and make sure that this package could be paid for. The more taxes that can be raised, the closer we get to $3.5 trillion.
This does not help on that. There's no question about it, Guy. The reason they put the limitation on SALT on originally was to be able to pay for the last tax cuts, to come up with more revenue. If they reverse some or all of that, that's going to reduce the revenue, so they're going to have to make up for it somewhere else. Although, as you know, they're proposing just today, the Democrats, a wide variety of things, including a surtax on people making more than $5 million a year that they say could really raise a fair amount of money.
What is like a Bernie Sanders going to think about this, or an AOC?
Well, I don't want to speak for them. Sure. I would not be shocked if they didn't like it, because the basic perception, the argument for some of the most progressive people, and including AOC, who's been against a limitation of the SALT reduction, is that this benefits wealthier people as a practical matter. Those are the people who are paying the taxes to begin with, and that as a practical matter, this does not help the poorer people. So I wouldn't be surprised if they're not very excited about it.
Do you think it's going to stop people going to Florida?
Well, there's a big question, Guy, about how many people really are going to Florida as a practical matter. But that was one of the arguments made. You're exactly right. People are saying that people go south because they don't have to pay as many taxes. So maybe some of those hedge funds will come back. You don't know.
All right, David, thanks a lot. Really appreciate it. Bloomberg's David Weston joining us there. And stay with David, because on television he'll be talking to Michael Zazas, but Morgan Stanley, head of U.S. Public Policy Research, on Balance of Power, kind of next on Bloomberg Television and Radio. But, Guy, I think it also just sort of puts in a focus where we are in terms of the infrastructure bill and the pay-fors. And this obviously going to be, as you pointed out, a big question mark.
The pay-fors are really important. And actually, I thought David did a good job of kind of pointing me back towards that extra levy that we've seen announced over the last 24 hours. You wonder whether actually that was done with some foresight to this news maybe coming out to ultimately end up balancing each other out. So it becomes a little less regressive than maybe it would have first been. So it keeps the likes of AOC maybe on board. We will see. So we came into the show 2.5 hours ago, me asking you the question, what was the most important thing for Alex Steele today? Was it your daughter going back to school? Was it the fact that energy prices are going? I've now figured it out. It's neither of those two things. Looks like it's salt.
It's salt, kid going back to school, energy prices. We're going to radio. This is Bloomberg.